who better than Ajay Joshi, chemical industry expert, joining in on the show right now to talk about exactly that. Ajay, hi, thank you so much for your time. Firstly, put the broad picture in front of us. What is the implication of what's happening between Israel and Iran, and how it's going to impact the Indian chemical industry?
See, broad impact would be Iran is one of the largest oil producers. They produce at around 3 million barrels per day of oil, crude oil daily. So, with this ongoing conflict, plus the Strait of Hormuz, which Iran has almost banned, the supply chains of crude oil and natural gas would also get affected. So, this means for the world is that oil prices would shoot up. And when crude oil prices shoot up, inadvertently the chemical prices, because they are derived from the crude oil, that would also shoot up. Particularly, luckily, India does not import much of its crude oil from Iran. We now import from Russia. But Iran being a significant player in the global oil production market, the global supply demand dynamics is pretty imbalanced right now, which means that the prices would go up, and crude oil is already up more than 10-12% today than last week. So this means that the raw material cost would increase, the input cost would increase for Indian chemical producers. One such chemical is, of course, methanol, which around 15 to 20% of India's methanol import, they do come from Iran. So now we would have to look out for alternate supply source. But again, we would get it costly because Iran is a significant player in the methanol supply. So companies which make amines, companies which make pyridine in India, they would have to pay more pricing now to get the raw materials.
Sure. So, Ajay, could you elaborate on that point? Tell me which are the key chemical players here in acetic acid and methanol, which are expected to be impacted by the Iran-Israel tensions?
The key importers of methanol in India are amines players. So companies like Balaji Amines, companies like Alkyl Amines, then companies like RT Industries, which use methanol to make downstream derivative intermediates, companies like Jubilant Ingrevia, which use methanol to make pyridine, which is their key starting material because they are a full-fledged pyridine player. So these are some of the big consumers of methanol in India. For acetic acid, the biggest two consumers are again Jubilant Ingrevia and Lakshmi Organics. So, because of this conflict, I do see the input cost, the raw material, the cost of manufacturing cost going up this particular quarter for Jubilant Ingrevia and Lakshmi Organics, particularly, and also for the amines companies in India, particularly. So, we would see some effect on the margins in the current quarter for these companies.
Hi Ajay, morning. This is Shrishti also joining in. But Ajay, since you have already highlighted the fact that you are anticipating the prices to hike, any estimate that by how much percentage points do you believe that the price will hike? Or given the past 3 to 4 days, have we already seen any impact there?
The methanol prices actually have started going up. I just checked with a couple of traders in India who have the inventory. So they are already quoting 5 to 7% higher pricing today because there are going to be supply issues. Acetic acid, similar is the case, 3 to 4% prices are already up. So I think this week the things would give us more clear picture that how much input factor increase we are going to see in these two commodities.
Okay, and Ajay, also help us understand if you've been seeing any large inquiries coming in right now for specialty chemical players as a proxy to Iran. If yes, which are these companies? Because as we understand, a lot of these companies import their raw material from Iran. So if there were at all any chance of a supply disruption, what do you think could be the steps ahead now?
I think we need to diversify, but a couple of commodities we already have diversified. But now the problem is not about sourcing. We can get alternate supply source vis-a-vis Iran, but the problem is that wherever we source now, things would be costly because there is a global supply demand imbalance right now. So all of our raw materials, whether it is crude oil, acetic acid, methanol, ethylene oxide, anything, everything would go costly now because the entire crude oil value chain is getting affected. India, the specialty chemical player, unfortunately, they would not get benefited from this phenomena because anyway our raw material cost, input cost is going to increase. So our specialty chemical production cost is also going to increase. So we are not going to reap any significant benefit from this current conflict.
All right, but within the specialty chemical basket, Ajay, give us some sense that what kind of a linkage do we see with the crude oil prices, and domestically, any particular company wish to flag off which could be impacted the most?
I think amines companies, definitely, because they have a bucket of amines. And for those bucket of products, they do need methanol. So there we would see some strain. Then companies like Lakshmi Organics, which are in the diketene and acetyls, there we would definitely see some increased cost of production. So these two players in the specialty chemicals would get affected the most in India.
Okay, and Ajay, I also want to get your sense on some of these other chemicals that we're talking about. And let's put Israel and Iran on the side for a bit. Let's focus on Turkey, because right now trade sentiments with Turkey are also not at their all-time best. And from what I understand, we have urea, ammonia, and sulfuric acid among other raw materials that we are getting from Turkey. Are you seeing any disruption on this front?
No, there we do not have much disruption because anyway these products they go into the fertilizer segment, urea and all, and it is highly regulated and subsidized segment in India, and we do have plenty of alternate supply sources for these. So there we would not see a Turkey impact would be negligible on India.
So, is there a scope of multiples getting re-rated for the sector, Ajay?
I think a couple of companies which make these chemicals in India, companies like Deepak Fertilizers, companies like RCF, companies like GNFC, they make methanol in India, they make acetic acid in India. GNFC is the sole producer of acetic acid in India. I think these companies are going to have very good margins this quarter because the prices have gone up. They are going to increase the prices to their customers. So DFPCL, GNFC, RCF, these companies are going to have a gala time because they have monopoly over production of methanol and acetic acid in India.
Right. Okay, Ajay, so good chatting with you as always. Thank you for your time.
Thank you so much.
Okay, that's a deep dive into what the impact for the chemical sector because of what's going on between Israel and Iran is going to be on crude, natural gas, and then, of course, how it impacts the chemical sector here back home.